Glad to be with you. Thanks for the invitation.
Thanks for being here. Welcome. Just came straight from the airport. Thank you so much for doing that. So there's been a couple of introductions, I think, made of you today before you came on stage, but I'm going to just do a quick one as well. We've only got a little bit of time to get through a couple of questions, but it's been an exciting day in the crypto world. Yeah, so I want to chat about that. But extensive career, financial services, banking, technology, really a champion of our industry, and the first subcommittee chairman to hold hearings on the tokenization of stablecoins. So we really owe you a great debt of gratitude for taking our industry seriously and bringing it to the forefront of what happens in Congress. So today, lots of topics to discuss, not a ton of time to get through all of them, but I wanted to start with one just related to some news out of the SEC today. You've spoken extensively about the need for regulation instead of enforcement. And so I was wondering if you could share your thoughts on the legislative approach to regulating instead of just enforcing to figure out how our industry can grow.
This is so important, and it was it made my day to get off the plane at DFW and find out that Chairman Gensler is resigning on January 20th at noon. I think that's good because he's had the point of view, as you just raised, of regulation through enforcement. And whether you're a Democrat or a Republican or an independent, that's not how our system's built. We have a federal state system, and we identify challenges, and then we do rulemakings or we have notice to members. I've been a banker and regulated. I've been a broker-dealer. I've been an investment manager, and all those things, they're heavily regulated businesses. But surprise enforcement, suddenly declaring something's illegal and then generating fees and enforcement actions, or worse, accusing somebody of a crime without any notice, which is what we mean regulation by enforcement, it's just wrong. Mm-hmm. So with the Republicans taking the House and Senate, we've always advocated against this across the entire spectrum, not just of finance, but generally. And clearly, based on the 4 years we had of President Trump previously, that was the point of view of Mick Mulvaney over at the CFPB, Jay Clayton over at the SEC. So we'll work hard to have people confirmed in these jobs that recognize that. And that's the way we should operate. It will allow the industry to have some transparency and some planning and some ability to move forward. But I'll conclude with this. There are some things that cannot be solved by writing a rule or by using exemptive relief, and it requires statutory work. And that's why we crafted the FIT 21 bill as a set of definitions of a way of looking at life for both commodity and security aspects to encourage technology investment and not detract from it, delete it, send people offshore. And so even, let's say a robust Trump SEC wanted to use Section 36 exemptive relief, mm-hmm. They could only provide some of the strategies to benefit blockchain development that we have in FIT. You wouldn't be able to get it all done. And of course, the most well-known is the spot market for Bitcoin has to be legislated. And there's a shot at that in the lame duck, a modest shot at getting that done, which would be pulling that out of FIT mm-hmm. and doing it separately. I'm not saying that's going to happen, but there certainly has been some Senate discussions about that.
You brought up FIT 21. There was a panel earlier of a couple of people, including myself, that had worked in government before, currently work in government or are on the GR side. Mm-hmm. And we were talking about sort of the long list of things that now the Republican House and Senate will need to or focus on accomplishing in the next Congress. And the question that was raised by the moderator was, what do we think happens with FIT 21? Does it come back? Is it on the top of the priority list? Is it sort of low on the priority list? Could you share with us your thoughts about sort of what happens next with that legislation?
So the key is that we want to get blockchain started, innovation legal and functioning here without ambiguity, with transparency, without playing gotcha on regulation by enforcement. So people may have other ideas. I'm not saying FIT 21 is the only way to craft a market structure bill, but we didn't really have any other methodology. So we worked very hard with Republicans and Democrats to craft that bill. And we got it passed with a strong bipartisan support. So I would say, as we go into the new Congress, it is a base text to be reintroduced in the new Congress on the House side. But over in the Senate, I was pleased to see that Bill Hagerty, the senator from Tennessee, my former classmate at Vanderbilt, introduced, his view. Mm-hmm. This is what we never had over the past 4 years, was a series of senators on the committees offering a variety of different approaches. Of course, Senators Joe Brandon Loomis have been great. Mm-hmm. No concern about that. But you want multiple people engaging so that you can press the leadership to do something, have a hearing, take some action. So I do think it's a decent base text for us to think about. And as I say, it defines the playing ground of what needs to be attacked, what needs to be addressed. And that's a huge value because it's a roadmap for a Trump SEC to perhaps do some things by exemptive relief. Mm-hmm. I mean, it's silly to authorize essentially a digital assets broker-dealer and then they can't function. Right. That's just gaslighting people.
Yeah.
But that could have been something you could have handled by exemptive relief, for example.
Our company, blockchain.com, we operate in 194 countries. So we are often either on the receiving end of a regulatory framework or we're in a sandbox type version. Yeah. We talked about this in this group earlier. In 2021, there were a lot more crypto companies in the U.S. A lot of those had folded. They were maybe bad actors, or some of them certainly were. Yeah. But in the future, there are large companies like mine, like Coinbase, and we will be able to react to any kind of permanent regulatory framework. What are your thoughts about a regulatory sandbox, though, for the newer crypto companies that have yet to be invented or are just starting now?
I'm such a believer in that, and we took baby steps in the right direction under the previous Trump administration on fintech at large, because when you're using data and exploring new points of entry and it doesn't comply with sort of standard operating procedure, and certainly blockchain is that, and DeFi is that in spades, you want people to experiment and do that in an effective way. There's nothing better than a sandbox, and that's the natural part of the computer evolution and a testing concept. So we would be proposing that the federal regulatory agencies all go back to sandbox permissive environments. When we had a good one in Little Rock at the Venture Center that FIS was a lead sponsor in just fintech applications, period, we had regular flow of the FDIC, OCC, and Fed analysts to come down and spend, several days meeting with companies, learning about it. And the sandbox is a two-way street, which people, I don't think, get. It's a way for the supervisors and the regulators to learn new concepts, too. So it is the way to go. We'll be definitely pressing for that. I think it's clear that we'll have that direction from the incoming administration. And Senator Rounds and I have just introduced an AI sandbox bill because, again, when you think about machine learning and big data, you want to be able to, again, allow companies to experiment. And if we don't do this, we won't have the disruption in our society we want. We're just going to let the gravitational pull of the universe, if you're in banking or finance, all go to either the biggest tech companies that are already aggregating or the biggest financial services company because they have the budget to do it. Mm-hmm. Sandboxes level the playing field. Bills like FIT level the playing field. And I think a nationwide privacy law would do the same. There are many steps to this. But sandboxes are a place where both the overseers of a process and the innovators, disruptors can experiment.
Let's shift our focus a little bit to outside the U.S. Over the past couple of years, certainly the last 4 years, there's been a strong push for companies in the digital asset space to move developers, move their engineering teams offshore. Yeah. And that has a bit to do with not just incentives, but also just the regulatory landscape. And I can even think about in Europe, there's the MiCA law, which comes into effect in January, which creates a permanent framework. Does it concern you that you've got so many homegrown crypto companies that are starting to move offshore because of the regulatory environment?
Big time. I think in the data I've seen, and I don't want to split hairs, but I see different survey data of 15 to 18% of blockchain coders, for example, have moved offshore. And we certainly know major companies that have relocated personnel. This is not good for the U.S. economy. We should have a market structure to be combined with something that's already a home run here. The best economy, the biggest economy, a great capital market system, huge access to venture capital, innovation, technology. And so what we've done is we've isolated innovation in this space and declared it bad by government policy, and we've seen those assets shift. The good news is we can bring them back. Good policy here will attract people back because they want the U.S. They want to, they want our rule of law. They want our capital market system. They want our VC and innovators system and the whole tech ecosystem. And it's not as miserable in the summer as maybe Abu Dhabi might be, or isolated as beautiful as Singapore is. It's a rather long.
It is. Yeah, for sure. Although I am a new Texan and I got here in August, so that was a little rough.
Yeah, I lived here 10 years.
You understand, yeah. So I want to talk a little bit about one of the things that is really critical to us. Years ago, in the sort of FTX era, our company was considered a little dusty because we were very focused on regulation, KYC, AML, following the laws that existed for the financial industry, even if they weren't necessarily applied to us. These days, that actually makes us look pretty good because we were following those rules. I want to ask you about, there are proposals right now to port current KYC and AML rules to the crypto industry, and it may not necessarily fit in a developer environment. How does Congress sort of deal with those two competing issues where we need to ensure consumer protection, we need to ensure the stability of our financial system, but we also need to ensure that crypto companies have a model that's built that's reflective of their business?
That was the approach we took in FIT. It's the approach we've tried to take in the stablecoin legislation that Patrick McHenry has led on. We recognize that in a decentralized finance arena, you have to do things differently, even if you want to accomplish some of the same objectives. Right now, the whole system is built around regulating the intermediary, who then informs the participants what up and what their responsibilities are. Really, I mean, big picture.
Yeah.
Now we're going peer-to-peer. We're not absolving people of certain basic facts, and I think the system will improve. Like, I support things like NIST standards on the best authentication ideas to share out in the ecosystem. And it'll grow, and it'll grow great. We will solve this problem of true identity, authentication, and that, because we don't want that to block advance here. And I think it will if you focus on the negative. And I've said to my colleagues, you're fixated on this, and I got it, and we all have responsibilities as individual people in the marketplace of finance, not to mention people who hold themselves out as people in finance as a business. But criminal activity is in cash and in trade-based money laundering and halala and a million other ways on an enormous scale.
Yeah.
So we've had a hard time in Congress, I'd say, disaggregating the whole AML issue and determining who should bear that responsibility, that cost, and it will continue. But I think in sandboxes, that's where you would solve that problem.
Yeah.
And by letting people experiment.
When I have the opportunity to meet with you and your colleagues to talk about our company and the tech underpinning it, one of the things that is always so surprising in those conversations is that I share with them that if you're engaging in illicit activity, our company and Coinbase and others like it, they're terrible places to engage in that kind of conduct because you'll get caught immediately and we'll report you. Like, that's how sophisticated our systems are. So it's really more offshore dealers, not the ones that are.
Yeah, this is why, again, if we have the right market structure bill, and you can build on it, it's not one and done. We're going to have a basic market structure bill. I tell people, you can't go on to the future of decentralized peer-to-peer activity using the full benefit of blockchain, smart contract, closing without, let's get just some basic things done right, definitionally, and facilitate it. And then we can grow from there. Same with dollar-backed stable coins. The idea of a tokenized dollar private sector issued, not CBDC, concept. Let's get those basic definitions. We want those transactions here. We want companies to innovate here in that and not be offshore. And the dollar is the reserve currency of the world, and dollar-backed activities will be benefited by that stable coin, which is not to say it's the end all, but it's just another step in the competition of payment ideas that I want to see. I don't want to block it. I mean, I think that's a huge mistake. This is like if the Congress members of 1996 decided that they were not going to facilitate the internet.
Mm-hmm.
Now, we can't have the internet. There's pornography on it. And that was in the resolution in 1996. Oh my God, we know there's some bad stuff out there. But they proactively said the benefits far outweigh the costs, and we'll think about taxing and regulating what people do on this open protocol, not try to take over the open protocol and shut it down. And blockchain gives us a chance to go back to the openness of the internet, the dream of that. And that's why I'm a huge believer in what George Gilder called life after Google, which is, you know, a blockchain-based world where we own our own data and we are able to exchange with each other on an open basis. And that is the future. And it will give, I think, innovation and will level the playing field between big and small. And I'm into that. I'm not into big winning every time.
On that note, and actually on the point of internet, I would say at least the majority of Congress now probably has a functional understanding of how the internet works, regulation around it, what the issues are, kind of on both sides of the sort of ongoing debate on internet regulation. How far along are we, in sort of your opinion, in educating Congress about crypto, blockchain, our industry? How far do we have to go, and what do we need to do?
It's been really interesting. We've gone from zero about the time that Facebook proposed Libra. Mm-hmm. Two things were going on that summer. You had the IMF doing a lot of publicizing things about everybody should have a central bank digital currency issued by their sovereign government. It was just an obsession. And there are a lot of obsessions in government. I always try to tell people in private business, please don't send your employees to seminars, except for conferences like this, of course, because they come back with all these terrible ideas. Central bank digital currency. Oh my God. So that was going on. And then the sort of aborted launch of Libra, not ready for prime time. But what that did is it galvanized. Maxine Waters was the chairwoman of the committee then, and we've set up our fintech and AI task forces. We had those open hearings, fascinating hearings, with Mark Zuckerberg about it, and it got people talking. So from that moment forward, we've had members of the House Financial Services Committee working actively to learn about the benefits of blockchain, AI, and the ecosystem of Bitcoin users and thinkers and coders and developers, along with the balance of blockchain. They're coming to the Hill and explaining and giving good examples. Here's the top problem I have with members on the Hill, and you've experienced this. Well, I'll read about all this, but I don't see any purpose in this. I mean, I know Bitcoin's gone up in price, but I mean, what would I do with it? Is it a store of value? Do I write applications on it to use it in a financial context? So they struggle because they don't go past the first level of knowledge. And so the best thing that we can do is have digital assets in New York, come to the Hill and talk about the Canton project, and all they're doing in writing applications on Bitcoin, on blockchain, their blockchains, to disintermediate agency costs inside the financial services industry. And then I think you see a light bulb go off. I tell these members, if you're old, you know about Fortran and COBOL. And if you're intermediately old, you know about, DOS and the conversion to Windows. And you remember the internet, and you had a dial-up AOL account. And you bring them along, and then you talk about decentralization, open protocol, functioning networks, where people are writing applications to lower costs, give better service, have faster delivery, more accurately with less fraud. And oh, you mean it's like, yeah, it's like a software. Yeah. Oh, wow. Like iOS on your phone or Android. Really? Oh, well, that demystifies it to members. So I would just urge you, as you talk to members of Congress, policymakers at the state level, bring that kind of philosophy to you. Let me tell you a story about what I'm doing out on blockchain. Like, I've digitized all the driver's licenses in California, and now when I go in at age 16 and try to tell them I'm 18, when they wind my phone, no, pal. We've got to do more storytelling, and I think that will help us. And we've done that. We got over 70 Democratic votes with the Republicans to do on FIT. Chuck Schumer voted with us on the crazy staff accounting Bulletin 121 nonsense of Chairman Gensler. We have a bipartisan consensus that innovation is good. We want that innovation in this country, and that blockchain and Web3 is moving forward. And that's all because of the people in this room and people like you who have come and told these stories on Capitol Hill. It's a very human American way to operate, and you've been a big part of that. So we're grateful to you, but you can't stop. So I would say if we were 0 in 2018, we're up to, now we have all these new members, but it's a perpetual motion machine. I'd say maybe 30 or 40% of members can tell you what's going on here, but we need to get it higher. And I'm excited that guys like Haggerty and J.D. Vance and Loomis and Gillibrand, there's a broader group growing in the Senate that's just as interested as we are in the House. I think that's a positive thing.
It's very heartening to hear you say that. And we have work to do as well, which is, for the longest time, it was crypto's a good idea because crypto's a good idea. And we weren't really sharing the value proposition with anybody, right? It was really just the idea of crypto itself. And I think all of the crypto companies are evolving and figuring out how to share that story.
The crypto universe is large. It's diverse. It's very interesting. It's very creative, from the most libertarian concept to someone who says, I just think I can, take an analog activity that's just totally jacked up and use blockchain to solve for everything being better. So those stories and that diversity needs to be told. I was in Saudi Arabia, sometime this summer, and I was at Saudi Aramco. They put their whole accounts receivable on blockchain. They've shrunk from 40 days to 15 days. That's billions of dollars in time value of money. And we actually have the CEO of Franklin Templeton, a well-known mutual fund company in America, personally coming to Capitol Hill to talk about how the Benji on the blockchain has allowed them to offer that product to investors at a lower opening required balance, minimum balance. And that it talked about their expense reduction for full compliance with the SEC's money market account rules. So let's go solve problems, and we will get more converts.
Last question. You've been very gracious with your time. 119th Congress, digital assets related or not, the big opportunities, the big challenges, what are you thinking about for next year?
One of the most interesting things, and the ecosystem has benefited from it because of a lot of federal court cases, including recently on the dealer rule, another loss for the chairman today.
Yeah, that's right.
The court's decision in West Virginia EPA and the Loper case have given us something that we haven't had in 40 years in this country, which is reclaiming the power of the people through Article 1 in the Congress on what's called rejecting the Chevron deference, which Justice Scalia said was the worst case he voted for and attached his name to the opinion on. This means that Congress wants to make sure that the independent agencies and the cabinet agencies are doing exactly what the statute says they should do, and not have deference that if they make a pronouncement, guidance, issue a rule, that they have the power of legislation. They now don't, and I think that'll be a big theme throughout the work we do in Congress coming up, across the board, but certainly in financial services, and we're excited about it. We're tired of the government being weaponized against the private sector. It's ridiculous.
Well, on behalf of our industry, thank you for focusing on that. We would agree. And thank you for being such a steadfast steward of our industry and being a partner and a friend to all of us. I appreciate it. I appreciate your time today.
Great to be with everybody.
Thank you very
for the
much.
invitation. Very much.